Hi, today is Saturday the 11th, and this is the SPX Outlook for the week starting Monday 13th to Friday 17th. And of course, I invite you to do exactly what I've just done. That is to watch my previous report and see whether I was any accurate. I mean, this is how you sharpen your market reading skills by maybe seeing where you went wrong, what indicators maybe were a little bit confusing. But overall, this is not a very difficult market to read, even though this is maybe not the market we would want to read if, like me, and majority of options traders, we are market neutral. So last week I mentioned that the market, especially on a 4-hour chart, and this is the one we're looking at now, could turn downward, and it didn't really. I mean, it tried early in the week, but it always found support on 32.15, which was quite clearly identified. And then late in the week, market shot up to aim for the strong 32.85 resistance. So at least we are there. In terms of the market possibly keeping on grinding up, it is very much possible. We're still in the same channel. And as you can see, support resistance levels are actually moving up. Last week, I thought that, well, these lines are going down. This is maybe time for profit taking. It hasn't materialized, and now the lines are up. And actually, the very strong resistance, which for a while acted as a pivot, the 31.25, is now officially a pivot. And now, if you look, we have a much higher possible target. In terms of price gaps, we're still looking at 40 points roughly. So that means that 4 gaps of 40 points, 160 points above 31.25, this is exactly where we aimed yesterday, 32.85. This does not mean that it couldn't actually go higher. That said, it's not easy to draw any fib expansion because it's been a running up market since early October. So we have to use other tools to try and predict where the market could be aiming. So roughly, if the market keeps pushing and in the same channel, which would mean the same gradient, and this gradient has proved to be sustainable over a long period of time. So the market could keep grinding up and go above 3,300. I know it sounds weird, it sounds quite crazy, but we can't discard the fact that the market will keep grinding up. We will be going into earnings season in maybe 2 to 3 weeks' time, and that will probably determine where the remainder of the first quarter will go. Now, late in the day on Friday, we went into a slight profit taking to 32.65, which was, and again, if we look at the 20-point gap, it was actually the resistance for most of the week. Again, we would need to go and test the channel lows and 32.15 to maybe look at a possible downturn or reversal, but probably, as I said last week, probably nothing major. We've had a good buy signal here. The market seems to be peaking in terms of strength or energy, and it could be returning to a down signal. Even though this signal was not properly timed, it can happen that it comes a little bit too early, but this trend could be indicating that the market will test one of the support levels. 3200 is a strong one. As you can see, 3185, maybe 3177 is also across 2 different patterns a good support levels. We're not in a situation where the market would go into a massive sell-off. There will be a lot of support to cushion any fall, and as you can see, if anything, the support resistance levels are actually shifting up. If we go to a shorter time frame, we have the same picture in terms of a channel. We can maybe identify levels a bit better around 32, 35, 32, 30, where buyers came back around midweek. What we are seeing here, but of course, being in a 1-hour chart and with a limited capacity in predicting direction of a longer period, I mean, this is probably something to look at for Monday, maybe Tuesday. And as you can see, compared to the 4-hour chart, this chart doesn't show many signals. And the reason is that the ATR, which measures volatility, is too low. So those signals are actually filtered, which means that it's probably difficult to day trade at the moment unless you go with the flow and follow the herd and buy, but maybe this is also a time to take profits. And if we look at the daily chart, still very bullish. This one is also shifting up, so although it's not visible yet, now definitely 31.25 is a pivot level. And as you can see, as we've moved up the fib pattern, this is actually the first strong support level on this up move from early October. It is quite common to see that there's a ex post convergence of factors. I mean, this support level was indicated by that orange line for a while, and now it's also being confirmed by a fib pattern. So we'll see, and I anticipate that there may be a bit of selling on the channel breakout, but if anything, it will be cushioned, and I don't anticipate the market to drop below 31.77, 31.85. Now back to the 4-hour chart, we see that the market closed at 32.65, which is probably for Monday morning close to the channel low. And so if we see by midday these levels about 32.45, 32.50, we may have that selling acceleration to the levels I mentioned earlier. So the market should be congesting essentially because 32.85 is a very strong resistance that may pause or at least quash buyers' appetite for a while, and it will be now the 32.15 just after a channel lows. It will be the 32.15 to 32.35 that will have to be monitored closely. Now, lastly, a look at the VIX term structure. The Jan VIX is quite low, and it will expire next week. And there's already some rollover activity because VIX will expire on Tuesday. And the rest of the curve is fairly flat, actually. It has gone down, but almost in a linear way, just the whole curve from February to September being shifted down in the last bull run. But this means that in case the market would surprise us with maybe 32.15 being broken, we could have a very quick VIX flattening and possibly some inversion by late in the month. The true test will be earnings around end of Jan, early Feb. Okay, that's it for now. The next video will be posted when market makers are back at the desk on Monday morning. Bye for now.